What's up, everybody? Michael Silva here to do some technical analysis on the financial markets. I'm going to try to keep today's video really short and to the point. Let's just go ahead and get right into it. All right, welcome back. The first thing that I want to start off with is kind of just where my thoughts are. So, most people would put this into the conclusion to kind of wrap everything together, but I want to start off with where my thoughts are with this current market and talk about my strategy. Then I'm going to go into the S&P 500 shortly, and we're going to look at the closer time frames, like the 2 hour, and I'm going to show you some key levels that I'm keeping an eye on for placing bigger size trades. So really what I see going on right now at this particular point in time is not only a whole lot of market uncertainty, because there has been, but there's a lot of different things taking place as far as the news headlines go that the market really reacts to. And I wrote down a bunch of them. So one of the big ones is the stimulus, right? We're still in talks about the stimulus news. We had some news article today about Nancy Pelosi meeting with the Treasury Secretary. So there's that, and then apparently they're meeting tomorrow, and a lot of that is all about the progress. There's progress being made, or there's not progress, but don't fire your employees yet because, we're coming to a conclusion here on all of this. So it's kind of like this dragged on process, but they keep a little bit of hope. It's like, you're I saw this on How I Met Your Mother. You have an ex-girlfriend, you said, you know what, we're over right now, and then the door opens up a little bit. And that's kind of what they're doing with stimulus right now with us. They're saying, we don't have it right now yet. So that's kind of what I see going on with the stimulus. And the market, unfortunately, I think this is the stuff I don't want to talk about really, but the market really responds to this type of things. Okay, so that's one. Then we have the president. He got coronavirus. That was not good news, but as soon as he all of a sudden showed a lot of strength, and then there was news around the progress around that, that was more news. So funny, the tweet, or when he came out, it was about 40 minutes prior to the futures market open on Sunday with all that good news, and obviously that was all set up for a big limit up. And you got to just, like, why are they doing this? Why is it can't just be a coincidence that this is timed so perfectly. So we got stimulus news, we got president's progress, we have, which I haven't really heard too much about, was the vaccine news, but it seems like it's kind of tying in together with the president's progress. And what's very interesting about this situation is the president is older and overweight, so he fits in the demographic where COVID can really affect you. And what's interesting is if he can recover this quick, and yes, I mean, he has probably the greatest doctors helping him out, and then has access to all kinds of treatments that we don't really know too much about because it's very vague. But still, if he can overcome it, it makes probably people think, why is this such a big deal as of right now if he can just simply get over it? So you got to understand some perception out there where we might just all of a sudden see, like, okay, if it's really not that bad and people start believing that it's not that bad, what could be the outcome of people thinking like that is, kind of where I'm going. And I don't have an answer for you, but, just think like that is what could potentially take place. So those three things. And then we have the possibility of the contested election. So we have President Trump and Biden. We don't know who wins, but whoever does win, is it going to be contested? Is it going to be drawn out and gone to court? Will we not know who our president is until 2021? So that's another possibility. And then we have the Federal Reserve, all the tools in the tool belt, right? Are we going to be adding more liquidity to the markets? We will see. Not too sure. But there's all of these different events that are kind of just behind the scenes and kind of just out there, so we don't know whether the market wants to kind of just respond to how the economy is currently, or if we're just kind of waiting on the sidelines ready to pounce to basically make new highs or melt up even further. So there's all kinds of things taking place. So why am I saying all of this stuff? Well, one, because there are so many different factors taking place that are typically just headline news, and these things will have a big impact on the market. So how do you protect yourself with this stuff? So first off, we're going to be looking at key levels in the S&P 500. That's probably the most important thing to do, is to set up high probable risk versus reward trades at certain key levels, and that's what we'll talk about. And then we have to look at the sectors that are performing. My overall kind of thought process here is I am risk off at this particular point in time. I'm the guy that's riding a bike behind the main person so I can catch a draft. And I said this on a tweet. Basically, I'm just saying that I'm the guy conserving energy while other people are taking, doing all the work for me. So the utility sector is typically low beta, and there's been a good flow of liquidity and volume going into that sector. For the last 3 months, it's been performing quite well. This chart right here is the XLU over the SPY. XLU is the utility sector, and as you can see, when it goes up, it means it's outperforming the SPY. Right? So it means that the XLU is doing good relatively to the SPY. When it goes down, it means utilities are underperforming the SPY. And as you can see, we crossed over here on the 13 EMA, and we've been going up steadily ever since. So it's building a nice move to the upside, which would indicate to me, okay, now it's my duty or our duty to find stocks within that sector that are performing. So on my weekly scan, I went over 3 different stocks from the utility sector, good setups, and they're doing quite well. I filled one of them, and then I missed by 2 cents on a fill for the other, which I should have just entered into it, to be quite honest, but I stuck to my plan. So I'm looking for low beta utility stocks, and the reason why is simply because of this chart right here and the matrix. The last 3 months it has been performing quite well. Will I enter into a higher beta stock outside of utilities? It's a high possibility. However, if I were to do that, I'm going to be reducing my risk size or the amount of capital that I would put into a trade. So if it's, I'm just going to say Tesla, if it's Tesla or Apple or something like that, because those are higher beta stocks and they're outside of the utility sector, I would be reducing my position size on that specific trade, and I would still be doing and looking for a 3-to-1 risk versus reward, high probable trade. So that's kind of my thought process as of right now. Let's go ahead and look at the S&P 500 on the 2-hour time frame. Okay, so I'm starting off with the 2-hour time frame right now because honestly, it's most relevant to me at this particular point in time. And you could pull up the daily and you could pretty much compare the two side by side, but to save time, I'm just going to look at the 2-hour today. So the 2-hour, yes, we had this falling wedge, we broke out, we were mapping the positive divergences previously on the RSI, and we started breaking out and moving to the upside. Now what we're forming, and we discussed on the last market brief, was potential of a bear flag, or now what we can see is a rising wedge. Now, why am I showing you a rising wedge right now? Well, first off, we have this gap. It's been kind of just going up. We just broke above the 50% fib level, and now we're running into a bunch of different confluence. The 61.8% fib level is a major fib level, and a lot of traders will be watching it. If we look back in the history of the chart, look where it lines up. We're at the basically highs of these bounces right here, just below it. So this pink box that's going across the screen, there's going to be a lot of confluence there. One, we have the upper part of this channel or this rising wedge, whatever you'd like to call it. We have the previous resistance right over here, and then we have the 61.8% fib level. So if you don't want to short the market, perfect. But I wouldn't go long at the 61.8% fib level unless if we start closing and holding above it. Because as I see it from a technical perspective, this can get some legs and we're going really good, but the RSI could simply get into overbought territory right up into all this confluence, which could then lead into some sort of a pullback. So if you are somebody that likes playing puts or doing advanced option strategies or just shorting equities, you can look for good setups in the S&P 500 or various sectors when it reaches up to these levels. One that I have my eye on is Peloton. Peloton has a negative divergence. Actually, let's just show you the chart right now. So here is Peloton, and Peloton's been this rampant, just move higher and higher. They have decent fundamentals, so things have been going very well. But from a technical standpoint, I actually shorted them once on this day over here for a quick 17% gain. You're probably wondering how. Well, it was just an options put, and it was just a scalp. It just worked out really good. But what's going on right now is we're getting overextended from the Bollinger Bands. We have a negative divergence in the RSI, and we have declining volume. And then we also have a negative divergence on the RSI previously right over here. And what we could see that took place was we saw a market drop shortly thereafter. So if we keep getting moves up into here and we see the S&P 500 reach into the 61.8 fib level, this could offer up a potentially really good risk versus reward trade or a fading type position to go short. So I'll be keeping an eye on Peloton, but there's also going to probably be various other setups. So I'm going to first have to wait for some sort of confirmation. But this being a higher beta stock, this could be a good little capture or a scalp trade to potentially capture some price action to the downside. Now the VIX was also positive today, up 1.19%. Very interesting. Now the head and shoulders, the inverse head and shoulders pattern is still holding. You would think that on a day like today, we would see a steeper pullback in the VIX, but we did not. So it makes me kind of think that, hey, there's still a risk off play in action right now. So this is another reason kind of to my narrative of as why there's so much market uncertainty. The NYMO is making higher and higher highs right here. We just had this very steep move to the upside. This to me, I mean, you got to think this happened in 2018, very similar. We saw a very similar pattern, and it ran up to that 6.18 fib level on a big move, but being on a negative breath previously. This to me looks like it can lose its steam fairly quickly too. So, obviously we had all the sectors. I think there was 13 sectors in total in the S&P, or 11 sectors, I can't remember, all moved positive today. There was a lot of push, a lot of positive optimism, but we still have to make sure we're paying attention to those key levels, because what these type of moves do is typically bring in other investors and other people thinking like, oh no, the market will be continuing, it will be continuing, it will be continuing, and they typically get in at the wrong time. So we got to watch out for these levels. Can the momentum continue to the upside? Absolutely, but you want to be very hesitant when the S&P 500 reaches the 618 level, because there should be, and definitely looks like there should be or would be, some resistance there. Two last charts that I really want to kind of tap on today is one, the TNX. Now the TNX is the 10-year treasury, the yield, and we've been saying that, I'm long-term bullish, long-term bearish, short-term bullish, and we were following it, not doing anything for the longest time, and now we're getting kind of this squeeze higher. We're at 7.62, so a pretty monster move for the day. Now this probably run into resistance around 9. So if we keep on getting moves to the upside, this 200 period moving average, and there's also resistance out in this way, that should act as some sort of level of resistance. But we will see and kind of monitor how strong this move actually is. The last chart I want to show you is the dollar, and the dollar right here is still forming a nice basing pattern. Yeah, we saw it go down today, but down 0.36. And it's still really kind of holding above the 50 period. So this to me is not considered a breakdown by any means. It's still up here, and this obviously had previous resistance at 93.40-ish, right around there, and we're kind of bounced. You see a little bit of a lower wick there. So we're going to monitor this one. If we start getting close below the 50, then this move might be considered to the downside. But as you can see previously, when we were down here, we moved up and then we trailed sideways for quite some time before breaking out. So this might very well just be trading sideways until we see that breakout move higher. So keep in mind, if the dollar goes higher, it's going to apply pressure on equities. So when would we see this break out? I think that if I'm right about the 618 level on the Fibonacci, we're going to continue to see a little bit of a downdraft, maybe sideways moving into the dollar. But as soon as we hit that level, I think we might be eventually spiking out to the upside here and then continue a run on the US dollar, putting more pressure on the equities and other various assets like gold and silver. Gold, I'm not going to even do the analysis today because, there was a little bit of price movement, but we're still below 1950. And really to capture it and make me feel more bullish at this particular short-term bullish level, it needs to be above 1950, and it has to hold that level. But as I see it right now, it can still break down just as easily as where it's kind of been from that first breakdown that we saw. So that's all I have for you on today's market brief. Keep an eye on that 618 level on the fib. And then I have the 30-minute chart updated below as well if you kind of wanted to map out some trade plans as well. But I told you I'd keep it short today. That's what I'm going to do. See you guys on the next market brief.